Our bull case was $1.5 million in 5 years. So that would have been 2027. We still have time. And we still think that's going to be right. If you just look at the institutional push into Bitcoin, this new asset class, they have to consider it. There are 19.6 million Bitcoin out there right now, and the highest it will ever go is 21 million. Okay, there's real scarcity value. And what is going to happen? The price increase for every institutional dollar pushing in now is going to be much higher than it was last year, 2 years ago.
Cathie Wood is the founder, CEO, and CIO of ARK Invest, an investment management firm that manages several actively managed exchange-traded funds based on disruptive innovation. Cathie and her investment management firm are heavily invested in Bitcoin, and with the resounding success of the spot Bitcoin ETFs, the American investor says she has become even more bullish on the leading crypto asset. While attending a conference hosted by Singularity University a few years ago, Cathie gave a bull case of $1.5 million for Bitcoin in 2027. We are only about 3 years away from that, yet Cathie believes there is still a lot of time for Bitcoin's price to climb that high. During her latest interview with Peter Diamandis, a popular American marketer, entrepreneur, and the co-founder and executive chairman of Singularity University, Cathie explains that the massive explosion in the demand for Bitcoin through the spot Bitcoin ETFs makes it almost a certainty that prices will get much higher in the coming years. Cathie is predicting a massive 2,300% price explosion for the leading cryptocurrency within the next 36 months. During her discussion with Peter, Cathie also talks about the success of her firm's ARKB Bitcoin ETF, one of the spot Bitcoin ETFs approved by the US Securities and Exchange Commission in January. With the exception of GBTC, ARKB is the third Bitcoin ETF by total flow and assets, with $2.038 billion in assets and $1.563 billion in flow, according to recent data from BitMEX Research. Though the ETFs have so far been very successful, Cathie says they are about to get bigger as soon as an important category of brokers begins offering them to their clients. We will now bring you clips from Cathie's interview, but before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also drop your comments and observations in the comments section below. These simple actions help with the YouTube algorithm and contribute immensely to the channel's growth. Thanks, and enjoy the video.
Bitcoin, congrats on your ETF. It's done very well. You're number 3 now?
Number 3. You know, this was David against Goliath. And, so this is a very nice win for us. Now, we're not finished. And in fact, in our business, what's interesting is the wirehouses, which dominate our customers. So Morgan Stanley, all the advisors at these wirehouses, Morgan Stanley, UBS, Merrill Lynch at B of A, Wells Fargo, not one of them has approved Bitcoin on its platform. That hasn't even happened yet. And those are our primary clients. When that happens, wait until you see.
Explosion.
This is not just a technology. It's a new asset class, right? And beyond that, it's a global monetary system. It is the first global, private, meaning no government oversight, digital and decentralized, rules-based. That's the most important word here. Rules-based monetary system in history. It's a big idea. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is typically when you go through a price move, a Bitcoin price move to the upside, you usually see long-term holders, which is a metric we monitor. It's an on-chain analytics metric. And it means people who have not moved, or wallets that have not moved their Bitcoin in 155 days or more. Yes. Well, normally when you go through a price move to the upside, a very nice one like we've seen in the last year, that tends to start moving down. And it did that, true to form, but it has reversed in recent days because what we learned is GBTC sold some of its Bitcoin. So those wallets hadn't been changed in a long time, right? Now that is done, at least for the time being. Now that is done, and it's going back up again as the price goes up. That's highly unusual. And I think it is because the long-term holder is saying, why would I sell now when I know all these institutions, which own nothing in this realm, in this new asset class, they have to consider it because it is a new asset class.
Cathie is gleefully looking forward to when wirehouses associated with big names like Merrill Lynch, Morgan Stanley, and Wells Fargo will begin to offer these spot Bitcoin ETFs. She believes that would be truly game-changing for ARKB, other Bitcoin ETFs, and the underlying crypto asset. Fortunately, that moment might be sooner than we imagined. According to recent reports from Bloomberg, Merrill Lynch, the investment arm of Bank of America, and Wells Fargo's wealth management unit have begun offering access to the spot Bitcoin ETFs to selected clients. According to the report, which cited sources familiar with the matter, such clients must have brokerage accounts and specifically request the Bitcoin ETFs. UBS Group is also reportedly offering some of the approved spot Bitcoin ETFs to certain wealth management clients with brokerage accounts on an unsolicited basis. The Bloomberg report also revealed that Morgan Stanley is considering adding spot Bitcoin ETFs to its platform. These firms making an abrupt U-turn less than 2 months after launch is just another evidence of how successful the Bitcoin-based products have been. Let's get back to Cathie's interview as she speaks further about the coming exponential growth in disruptive innovations.
In the financial world, exponential, that concept, the last time investors heard it was during the tech and telecom bubble. And for them, that ended badly. Now they just don't believe it. They don't believe it's possible to sustain growth rates at 15, 20, 25% plus per year. But what we think is going to happen is not exponential growth, but super exponential growth as we get the convergence between among technologies out there. We think in the next 5 to 10 years, you will not recognize the world as we know it today. When we're trying to help people understand the same thing, again, not just investors, but anybody, we often say the last time we had multiple innovation platforms evolving at the same time was in the early 1900s, late 1800s, early 1900s. And absolutely right. That's what, got everyone off the farms and into the new world, right? This is the same, but it's on steroid. People are scared. And they are hugging benchmarks because they don't want to go through another tech and telecom bust. They don't want to go through another financial meltdown. People are talking about, another technology hype cycle here. So these are trigger words for them right now. So here's the irony. In the late 90s, I was there. In the late 90s, this idea of the internet captured the investors' imagination, and they started valuing companies on number of eyeballs potentially in 10 to 20 years. Too much capital chased too few opportunities too soon, and it ended badly. The technologies weren't ready, and they were too expensive. But what people do not understand is the seeds for everything happening now were sown during the 20 years that ended in the tech and telecom bubble. They've been germinating for 25, 30 years. We are ready for prime time. And unlike the late 90s, they're running away. They're running for the hills. What are the hills? They're benchmarks. It's ridiculous.
Meanwhile, Cathie Wood is not the only one excited about wirehouses offering spot Bitcoin ETFs to their clients. Earlier this week, senior Bloomberg ETF analyst Eric Balchunas revealed that wirehouse platforms are seriously looking at adding the ETFs soon because of the massive pressure from their clients. In an interview with CNBC on Thursday, Bitwise CEO Matt Hougan also talked about an even bigger wave of institutional demand once major wirehouses begin to offer Bitcoin ETFs. He said, "I think there's an even bigger wave coming in a few months as we start to see the major wirehouses turn on." The Bitwise CEO explained that the first wave of Bitcoin ETF interest has largely been from retail, hedge funds, and independent financial advisors. "So we're going to see the next wave of institutional capital coming," he added. "This is a new era of price discovery." Hougan also talked about Bitcoin's supply-demand imbalance, describing it as off the hook. He added that there's too much demand and not enough supply. As such, the next wave of institutional interest would push Bitcoin's price substantially higher, possibly even surpassing Bitwise's initial $80,000 2024 prediction to hit anywhere between $100,000 to $200,000 or even higher before year-end. What are your thoughts on Cathie's and Matt Hougan's super bullish prediction for Bitcoin in 2024 and beyond? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.